Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Got a great show for you folks today. One of our favorite guests that we have on our roster will be joining us today. That's Gene Munster, formerly of Piper Jaffray. Now, of course, left them a few months ago. Now the managing partner of Loop Ventures. Also, he will be a featured speaker at the Benzinga FinTech Awards next week. So we're really excited to talk to Gene and get his thoughts on these Apple earnings from yesterday. Of course, we're going to talk about Apple before Gene. It is the story of the morning, but there is a lot of stocks, 232 stocks reporting earnings. We'll try to cover as many of them as we can, so let's get right to it. Joel, how are we doing in the S&Ps?
S&Ps are down 3.25, still staying in that range between 2377 and 2390. Not going to get a big move until we take out one of those levels. You have crude trading up 19 cents at 47.85. It got hit yesterday, but OPEC to the rescue. You have gold trading down 220 at 1254.80. Silver in the red, now well under 19, down 4 cents at 16.79. Dennis, were you out there selling the straddle in Apple? Really muted movement.
Yeah, you know what? And what was the straddle priced at, Joel? Do we know what it was going in?
You know, I knew you were going to ask me, and I did not bring that platform up.
Anyways, I'm assuming it was much less than $1.60 because obviously muted activity here in Apple. I did sell half of my Apple long-term investment position yesterday ahead of the report. I didn't want to take it in. It had such a run, forward multiple on it, 17. It's just, not as cheap as it used to be. So that's why I kept half my Apple. I've had, that Apple for a long period of time. It was the position I doubled my position in back just in late 2016. That's what I sold. So I still have half my Apple position. I'm going to hold on to that, but it was getting just too much of my portfolio, so I lightened up my Apple position.
And what did you do with the money?
I actually turned around. I bought Canadian Solar, CSIQ. So, and this is probably just, we had talked about Gordon Johnson before. I don't know why. I don't have any solar stocks in my investment portfolio. I was looking at it. It's pulled back from the high. Gordon likes it. I like following Gordon. I think he always, makes some pretty bold calls. He's been bearish on, a lot of the solar stocks, and he came out with a buy on this about a week ago. Was it a week or so ago, Joel?
Yeah, little over a week.
I've been wanting to buy it. It's pulled back here now, so I've been eyeing it up. It got near the 13 level, so I pulled the trigger. And I'm actually already up a little bit in it because it is trading up here because of First Solar earnings. So that's what I went into. I went in from Apple. That's the way I was doing when Canadian Solar. So a little more diversification.
All right, just let me give you the pre-market action here in Apple. I mean, they hit it off the number. They took it down to 143.81. But the buyers have just come back here. The thing will not, it's down $1.76, but with the revenue miss, you might think it might be a little bit more in the red. This thing had an unbelievable run going into the report. They didn't blow it away. 147.51. That's my number on the upside. That's the all-time closing high, so that's a relevant number. Coming back on the downside, it just feels like buyers are stepping in here, and maybe they will above the pre-market low of 43.81. Basis the daily charts. You have a double bottom in the lower, actually a triple bottom in the lower 43s, 143s, but man, oh man, this thing is just looks really strong here, basis the 15-minute chart since it hit that low earlier today.
What was the pre-market low?
143
after hours low?
After hours low, Dennis, was 143.81.
Yeah.
You were probably waiting for that triple bottom in the lower 143 handle.
I had sold, so I'm looking at this, this is, just unbelievable resilience here, and it's holding on well, and I don't know. I wouldn't be surprised if it actually gets it back. 568,000 shares have traded. Like you said, it's been an incredible run into the report. Report wasn't great, although they did raise the dividend, and they did initiate more of a buyback there, so that always helps the stock. So trading down here 2 points in the pre-market. I'm just sitting on my hands here. It's kind of in the middle of nowhere, but I wouldn't be surprised if they come back. It seems like everything time, you get these companies here, like, the majors, at least, like the Facebooks and the Amazons and the Googles. It seems like every time they pull back, it's a buying opportunity. But we're going to have Gene Munster on
Right.
8:35, and
There
we'll
you go.
dive in with Gene there too and get his thoughts here. And I definitely want to get his thoughts on Apple before making any trading or investment decisions on it.
All
Um,
right. Bible
yep.
Driven, who I think is new to the chat here, before we go into the bevy of earnings, we got to talk about AMD from
Wow.
yesterday.
Just an absolute disaster. And we were on the show, and we've been saying, it's been a tricky market. When the ball starts going in one direction, it can continue very quickly. And if you're trying to call tops or call bottoms, or it just hasn't been working. And we saw this with U.S. Steel, and we warned multiple times it was going 28, 27, 26, 25, 24, 23, 22. So it seems like there's one of these every day. AMD was the candidate yesterday. It was in the pre-market. If you rewind the show to yesterday, it was in the 12 handle. And Joel and I were warning, and we were saying there's not much till 11. So I'm like, I don't know if it sees 11 today, but there's just a lot of air below here. So it was a warning to those who were saying, 12, 10, 10, 12 bucks might be the low. I did not see it going through 11 and down to 10.32 though. So that even overblew, my, most bearish estimates that I was saying yesterday on the show. 1032 closed at the low. It is trading up a couple cents here, but this stock is out of favor here now. And just go to the U.S. Steel chart. It's nothing to do, obviously, fundamentally, but when these things have huge gap downs, it's hard for them to come back because everybody who was calling the bottom yesterday is underwater here. Nobody expecting a 27% fall or whatever it had yesterday. And you can see U.S. Steel, after the first day had a little green candle and tried to close higher, but it made a new low. And almost every single day it's made a new low except for yesterday. So I would not be surprised if this trades into single digits today. I'd actually be shocked if it didn't trade in single digits today.
I just want to give a level. You fill the gap from the last earnings report. It took a while, but you got down the low the day before the prior report that gave you the big boost. The low was 1022. Plus, you have a big psychological level in $10, but that's about all it means. Kudos to Goldman Sachs, who downgraded this thing to a sell or initiated coverage at a sell. But boy, oh boy, trying to hold on to double digits. The only thing is, there's a lot of people still sitting on a lot of profits from 2016 when the stock was near the $2.5, $3 area. So if you think people aren't willing to sell in the 10 handle, I think we'll see what happens today. You have to look for at least a double bottom or something to lean on.
Yeah, hard to just come in and say, okay, this is the low. Now everybody's going to come in here and buy it after the disaster earnings report. You always have, Johnny come lately analysts that could potentially downgrade it here. Just no reason, I don't think, to just jump in and say, yeah, this is the low, thing's cheap, let's jump in, with two hands, because they seem to be, when they're out of favor, they continue to leak. And today's disaster stock of the day, so AMD was yesterday's disaster stock of the day. We saw U.S. Steel last week. Today's is TWLO. TWLO, and this stock is now down in the pre-market. Closed at 33.94. It is now down 11 points. It's down 33% here right now. Still in free fall from last night, just cutting through handles like a hot knife through butter. I mean, I'm not going to even go to venture where this is going to bottom, but what I'll say is if you're coming on the first day after disaster earnings report thinking, okay, it's got to bounce, it doesn't have to bounce. And, sometimes they do, but a lot of times they don't. I'd say more often than not, especially in this market right now, they don't bounce that much on the first day. They continue to leak and leak and leak. And you know what? This could be a $20 here today. Who knows? Like, it's already fallen 11 points. It's highly unlikely it's going to lose another 3. But I did not see U.S. Steel falling 7 or 8 handles. I did not see AMD, falling through 12, 11, 10. Even though we said it could potentially do 11, I didn't think it's going to get down close to 10. So it's the momentum market. When the ball gets going one direction, it's so hard to fight that tape. And if you're coming here buying TWLO right now, you are the definition of fighting the tape.
Spencer, give us that report. I mean, I guess it was the guidance, right?
It was the guidance. Earnings was fine. The guidance was awful. So Q1 adjusted EPS of a 4-cent loss versus 6-cent loss estimate. Sales 87.4 versus 83.6 million dollars. But the guidance again bad. Q4 adjusted EPS, they see that being 11-cent loss to a 10-cent loss. 9-cent loss estimate. Sales coming in a little bit below the estimate there. But for the fiscal year adjusted EPS, they're seeing a 30-cent loss to a 27-cent loss. The estimate was that they would only have a 16-cent loss, and sales of 356 to 362 million dollars. That's the range. It was all the way up at 370 for the estimate. So they missed big on the fiscal year guidance.
This is trading at a new all-time low. When stocks trade at new all-time lows, I always say you gotta go. So, I know it's a disaster, and I know if you took it home into the earnings, it's tough taking some stocks in the earnings because when they miss, they really punish them, especially these higher multiple stocks. But you do have 2366 was the old all-time low. That was on the first, I believe, the first day of trading. If it's below that when it opens, all bets are off. I mean, if it can get above there and hold that level, maybe you have a point, but I just think, this thing's probably taking that out. It's taking it out in the pre-market. I think it continues to leak until you get somebody that gives it a vote of confidence. I mean, a lot of times what it takes, once you get a bad report, is a big analyst to come out and give something a vote of confidence, or, the company to come out and say something. But, when it's like this, everybody's running for the hills, and it's hard to fight that freight train.
Rob Hood's thinking the same thing I am, because I know Sean Udall has been a fan of this stock. I hope he got out before the earnings, but I'm going to ping him today and get him on because we need to talk about Twitter and also this issue. Folks, Dennis mentioned the former all-time low. I'll give you the pre-market low of 22.75. All I know, if I had a big short position, which I don't, I'd be trying to buy at 22.75, 22.50, just scaling down. Another important thing, the opening print today, but man, it's near the pre-market low and it's just not bouncing. So you could look at it as someone, a big buyer's bringing a short in, or, it really haven't lifted, or the sellers might be getting a little tired. But 22.75 and then that old low 23.66, those are your two parameters, and I can't look it up yet, but I'd like to know where this thing was priced off the IPO.
That's a good question, actually. I don't know. Can we dig in the pro to find out the initial pricing before it came out?
I can get that for you right now.
That's an interesting question because that's probably below where it started to trade. So you wonder if it was like $20 or 18, because that could be a bogey level. Great call on that, Joel. Let's find that number out. So Spencer will go digging for that. In the meantime, let's give you some good news here. So they're not all disasters here today.
Wait, I got it. It was priced. Fast. It was priced at $15 a share.
Ooh.
Ooh.
All right, so listen. It was priced at 15, and then it opened at 22.
Yeah.
Right. So, or 23.99, somewhere around there.
Looks like 23.99.
Yeah, 23.99. I got that too. So, but 15 was the price.
Ooh. I am not coming in here and trying to call the bottom on TWLO. Nope. Not going to get
70.96. That was the all-time high in September of 2016. And I think I lost a few shekels buying puts on the way up there. But whatever. Big action, big disasters. So, Dennis, we're just going back to disaster again. Can you find something good?
Yeah, FireEye. Let's go to FEYE. Here's a stock that everybody's had the hate on for a while. And like we've been saying, the stocks that have been perennially hated here for, the last year are the stocks that are getting some love in some of these earnings. And, TWLO is maybe an exception because TWLO actually did have a little bit of hate here coming to the report as well. But FireEye here has been doing absolutely nothing. And all of a sudden, the dogs are barking again, and FEYE reports something must have been okay because it's trading up significantly, 15% here in the pre-market.
It must have been okay. Q1 adjusted EPS of a 9-cent loss versus a 26-cent loss. Estimate sales of 173.7 million versus 163.67 million. So they beat on the top, they beat on the bottom. They do see their Q2 adjusted EPS coming in at the high end of the estimate, and the sales coming in better than the estimate as well. Same thing for the fiscal year EPS, and we got some exclusive commentary on the Pro platform yesterday from FireEye management there, and they were boasting about their turnaround in operating margin. So a good number, it looks like, all around for FireEye.
Ace is calling it the dash for trash. I like that too. We call it combing the ditches. There's lots of different things you can call it when some of the dogs start to bark. And that's what we call dogs barking too. FireEye's been a dog here for a long period of time, but it's showing life. Just like Twitter started showing life 5 days ago and has just blasted off into complete orbit here now. Fire eye. I don't think I'm fading this just because there's been, a lot of, people say, okay, well, it's up, it's gonna, give it right back because it's what it always does. It's just the kind of market where, the dogs continue to bark here, sometimes for a few days. So it's up 14% here in the pre-market. It's off the pre-market highs, and that's the bad news, I guess, if you're a bull. What is the pre-market high, Joel? FEYE?
Joel, you're on
Joel's
mute.
on mute.
Did not quite get to 15 even for those holding out for the whole number. 1485 is your pre-market high. You're now almost a buck off that. Going to the monthly charts here, you can see an October high at 1503. So I think that will be protected today since you're a buck off that. And just switching over to the daily chart, I mean, these are the kind of stocks that I really have a problem. I mean, I've been bullish this thing for a while based on all the information that Benzinga's been doing on it. And then also these gap up days. I mean, here I am, down here with my bid at $11. I mean, I'm not going to get the thing. You had a gap up, a 3-day, 2-day consolidation,
Yeah.
another gap up. Now you're getting another gap up, just like Twitter. I'm like a deer in headlights. I don't know, I don't know where to buy the thing.
You
So
want to know why it takes off like that, though? It's because you don't know where to buy it. The shorts have no idea where to cover it. So when you have the gap up like that, they're hoping. Here they are. Okay, they called it wrong going into earnings. Twitter will call it, when it had the gap up after the earnings report. And the shorts, you have the shorts sitting there, saying the ones that are stubborn are saying, it's Twitter. It'll come back down. I'm going to wait for it to pull back in. And then, it has another green candle and another green candle and another one and another one. And now they're like, holy cow, I shorted Twitter 15 bucks, 18 now. Now I'm scared and running for the hills. You almost need a capitulation blow off top for it to come back. That's again, when the ball gets going in one direction, it's hard to go in the other direction because you have so many short-term traders that are caught. There are traders caught short Twitter here right now that have had the hate on, and it's worked for a long period of time, but they overstayed their welcome, and they're getting punished for it now.
got a nice boost from Mark Cuban yesterday when he was on CNBC. You filled the gap from the last earnings report. You had a high in Twitter at 1877. That was actually the day of the last earnings report. Yesterday's high, 1853. So we'll see what happens here in the upper $18 handle for Twitter.
And it's a great point, too. It's such a momentum market, but sometimes the catalyst behind that is because there's so many momentum traders out there. Everybody's waiting for Twitter to have a good report. They're waiting for it to have, an okay, couple of candle or a couple of candles before they come and they act. And now you get Mark Cuban coming in here now, and then, so because he's waiting, he's probably a momentum trader as well. He saw the thing was, dead money, and now all of a sudden it's showing life. So he's interested. It's actually, the smart play is to wait till these things start to show some life and then jump on board, I guess, after they start showing life. Because if you're waiting, for them to show life and, it's drifting lower, drifting lower, drifting lower, you're fighting the tape. You're no longer fighting the tape in Twitter. You're fighting the tape now if you're shorting Twitter. Now, that being said, stocks went from 14.5 to 18.5. Now you're chasing. But I mean, 2 or 3 days ago, if you were buying Twitter after that good report, you had your shot. And you know where your shot was? When it didn't take out the previous day's low. After the day after earnings, made a low of 1576. The next day went to test that, got down to 1580, passed the test, did not make that new low. That was the tell. And that was the tell that the stock wanted to go higher. And it obviously took off that day. It's taken off ever since. So, when you get that potential for a quick double bottom, 2 lows in the same area 2 days in a row, sometimes that's the turning point. And that was the turning point here for Twitter. And, now it's gone, I didn't participate either, kicking myself, for not being in it. But, that being said, I've never liked it from a valuation perspective, so I can't kick myself too hard.
Okay. All right. Another stock having a very, very good morning is Weight Watchers.
And this is another one. You can call this. This has been the dash for trash here for the last month. Weight Watchers. Now it's the definition of chasing here too. So look, this thing, we know it had the big Oprah pump last year when it went from $6 up to $27, and then it leaked down and it found support at 10, and it kept testing the 10 for almost a year. We traded, we trade down to 10, we'd bounce. We trade down to 10, we bounce. We trade down to 10, we bounce. Finally, at the beginning of 2017, they were done with, trading. They gave up trying to take it through 10. They couldn't. Started to find buyers, and then it had the big pop there. If we go back to March, when it went from 10 or 12 bucks up to $18 or over $19 in just 3 trading sessions. gave a lot of that back, but then it's been drifting up ever since, drifting up, and now it starts to blast off in orbit. So you're catching anybody, who's shorting it. That being said, again, this is the definition of chasing here now, and I don't like chasing stocks. So if you're on board, fantastic. But, at this point in time, you've got some highs you're coming into. Back in October, we're up to those highs of $27. That's major resistance up there.
Yep, I got your numbers for you right here. Weight Watchers Q1 EPS 16 cents versus a 4-cent loss estimate. Sales of 329.1 million versus 321.9 million. So great Q1 there. They also raised their fiscal year 17 EPS guidance. It was $1.32, $1.40. Now it's up 10 cents, so it's $1.42, $1.50. And then I saw someone, I wish I could remember who, on Twitter yesterday saying that this stock has just killed so many shorts. And I was like, you know what? That's a good way of describing Weight Watchers. Killed so many shorts.
There is a lot of stocks doing that right now, just killing the shorts. And it's like we were saying, it's these, stocks that have been out of favor that are the ones that are killing the shorts the most. It's not, the Amazons right now killing the shorts. The Amazons have killed the shorts forever. But, really, the earnings report, if you were shorting ahead of the earnings report, it gapped up. It gave the shorts a chance to cover. The same thing really with Apple. It's, it's not killing the shorts here. But you look at, a stock like Weight Watchers, that's murdering the shorts. Twitter, murdering the shorts. FireEye here this morning, murdering the shorts. Because there's people that hate these stocks. I mean, I didn't even go look at the short interest, but I'm sure on FireEye, I bet you it's high. Just curious. I'm going to go look at FireEye right now and see
While
what
you
the short interest.
While you're doing
Yep.
that, I'll just give you a quick recap here. Trading at the highs of the pre-market session, 24.85, 28.05 was the high of the move. But if folks, I'm not going to go over all the numbers here, but if you go back to when after this thing peaked at 28.05, it had a lot of congestion, like between 26 and 27 before it broke down. So see if it could get up to that level 26, 27, 28.05 was the former high of the move. And Dennis, I remember when Oprah first got involved with this stock, and actually it was quite a long time ago. So, that was back in September of 2015. You said, I'm not going to fight Oprah. I remember you
No.
saying that. And boy, oh boy, words of wisdom there.
Well, and we're just looking at short interest here too. I've got 16% for Weight Watchers. I buy Apple saying it's 80%. I'm not sure if that's the case or not. Maybe my stats are wrong. Also on, I was just looking up the FireEye, and I think it was, I already forget the number I just looked up. I think it was 18 or 19%. So these are significant. These are significantly high. You're punishing some people here this morning. So it's a trend. We've been talking about this trend the entire earnings season that the trash stocks have been performing well, and it's the same thing here again this morning. When you come in here and you see the FireEyes gapping up, and you see the Weight Watchers gapping up, and you see Apple.
Dennis? Did we lose you?
No, I'm still there, and I
Okay.
think that I don't know what happens every
All
once
right.
in a
I
while.
don't know. That was weird. Okay, hey, let's move on to Mondelez. All right. Mondelez reported yesterday Q1 EPS, adjusted EPS, 53 cents versus 50-cent estimate. Sales of 6.414 billion versus 6.37 billion. So good numbers there. They did say on the call that they see their Q2 sales growth below that of Q1.
Stock popping here nicely in the pre-market, but this is a food stock. And for the same reason that, I was, saying MO yesterday when it was down 4 points in the pre-market, saying people come in these things. These things typically don't move down 4 points. It ended up closing green yesterday. For the same reason, I'm going to say Mondelez. I don't think, you're up 45, 10, all kinds of resistance up here. Do I see this going 46, 47, 48? No, it's a food stock. I wouldn't be surprised if it just pulls right back over the next couple of days. So I think, so much resistance up here on the 45 handle. I'm, definitely, I'm not a buyer of this up here. Nope.
Dennis, you avoided so many lost lunches yesterday. I
You were
cannot.
trying to set me up left, right, and center. And, lucky I was on it because, I didn't take the bait there, Joel. You really baited me on that MO. What was it, like $66? I'm like, are you crazy? I'd never seen that. Ends up closing green after being down there. So just the lesson to be learned here. When you're trading food stocks on earnings and you're trading defensive stocks on earnings, if you're chasing these things, up 2, 3 handles or down 2, 3 handles because they're illiquid, they often come back in because they're just, when the real buyers and sellers come in, these people are holding these things for the dividends. Now, Mondelez maybe not so much, but it's a conservative stock. I mean, look at the range here for the year. Okay, we had an outside candle where it got ridiculous and went down to 41.30. I don't know if that was just, a bad tick or whatever happened there. But really, it's traded between 43 and 45 and a half. Go out to the weekly charts. We're talking about almost, since April of 2016. It's traded within 3 or 4 handles. So when you see the stock go up a couple points, it's a fade, isn't it?
I mean, it's just based on standard deviations. We're talking about this stuff off the top of our head, but there are statistical models that support this, right?
For
It's
sure.
not, yeah. But holy smokes, what's going on in STRP? Can someone give me an update
It might
here?
never stop going up.
I can give you an update. They said this morning that the all stock takeover at just under $136 a share is a superior offer to AT&T's offer. I think AT&T has how many days? They had 5 days. That was last week. I don't know what AT&T's deal is now going forward. But that's the reason for Straight Path today. They said that $136 or $35.96 is the superior offer to AT&T's.
You know what the deal here is? This is such a low market cap company. So
Yep.
you're talking about a $1.6 billion company. AT&T and Verizon both want it. I mean, 1.6 billion, 2.6 billion, it doesn't even make a difference to AT&T and Verizon. That's why you're in this vicious bidding war for this company here, because that money is just a drop in the bucket for both AT&T and Verizon. They both want it. So perfect scenario for STRP shareholders here, and they are just reaping the benefits here. Eventually there will be a deal, it looks like. It's just a matter of what the price is going to be. And holy cow, this stock, which was a $30 stock, a month ago, is now $153 in the pre-market. This got to be one of the best stories of the year, really, for these small shareholders that got this company.
Yeah, and hopefully they didn't take our advice on the initial pop, was, a lot of times the initial surge. But Dennis, you warned the entire time that it was just such a low cap that, there could be a lot of maneuvering to take it up. Dennis,
They both want it.
Dennis, I think just me and you should buy it for $200, right? And then just get everyone out of their misery. I mean, this is
well, I don't have $2 billion, so if or $1 billion each. So. But for AT&T and Verizon, this is a drop in the bucket for them, and they both want the company.
Yeah,
So that's what the battle's all about.
And those stocks, just real quickly, just going to your daily on AT&T and Verizon, man, oh man, these things are being left out in the cold in this risk-on market, especially since they went ex-dividend, Dennis, in early April. These things have just been lit up. Verizon trying to put a triple bottom in here. We'll see how it trades today. But once again, the post-dividend move, a very strong one here in Verizon and AT&T.
Yeah, and both these stocks here are completely out of favor right now. But you know what happens? Once they get to a point, I like the 44, 45 level in Verizon. It's come a long ways here. We bottomed back there in October 2015. I do not have Verizon in my portfolio. I'm interested in up in the 44, 45 area. It's now the dividend over 5%. We were saying on the show before, when these things start to get the dividend of 5%, there seems to just be value investors that come in. So no reason to be a hero and come and try to call the bottom. We saw that is a recipe for disaster right now in this market. But these are big companies that obviously have stable cash flows and the dividend's safe. 5% dividend. I don't think it can get to a 6% dividend. That's why at a certain point in time, there's buyers that just emerge. It's got dividend protection, and that's what keeps the stock with a bid under it at some point in time.
All right. How about First Solar?
Yeah, jump over to the solar stock. So actually, I believe Gordon's upgrading the stock here this morning too. But give us the numbers here, Spencer. They reported earnings there last night. It's getting a nice lift, helping my new Canadian solar position. So I was happy to see the First Solar pop.
Yeah, well, Gordon upgraded this morning from a sell to a hold on FSLR. As far as the earnings goes, Q1 adjusted EPS 25 cents. That may not compare to the 13-cent loss estimate. Sales of $891.79 million versus $876 million in the same quarter last year. It's a good growth year over year. They also raised their fiscal year 17 outlook, the EPS and the sales.
Stock getting a nice lift, and
Yep.
it's back in favor. It fits our description of a perennial dog, that's now barking here. I mean, look at the weeklies. Back at the beginning of 2016, this was a $70 stock. $30 stock as of yesterday, now a $32 stock. So it fits that description. So if you're playing that way, you would have been long this thing coming in. You'd been doing okay. So it's up 7.5% here this morning. Again, I'm not fading it because, this is just a trendy market. It's got some momentum behind it here now. Gordon Johnson's coming out. He's one of the most underrated analysts, I think, on the street at Axiom. He makes some bold calls. He's right a lot of times, and he's been bearish solar for so long. When he starts upgrading some solar stocks, it perks my interest. And that's the only reason that I bought Canadian Solar yesterday was because Gordon upgraded it there the week before.
Pre-market high 33.66, but you know what? You're getting some sellers congregating here at 33. Since 7:15, really since 6:30, you've had multiple highs right at the $33 area. So I'm keeping an eye on that. The chart also, the daily chart also coincides with that. You did have a daily high at 33.25.
All right.
There's just a ton of earnings reports, and if you want one specific, let us know here. We've got 1 minute before Gene comes on, and I wouldn't mind just talking about dry ships. Just because.
Oh, gosh.
Yeah, you know it. What do you
right,
think they did? It's down 31% here in the pre-market. What do you think they did?
Now, is this reverse? Is this reverse split number 5, number 6? I've lost count.
50?
I've lost
I
count.
see 7. I see 7 from Joey.
Jeez.
7? No, yeah, it's a 1 for 7 today. But
Oh,
how
okay.
many splits has this thing had?
Too many.
What's the new all-time high, Joel? Are you wanting to be adjusted for this one yet? Or you will be because it hasn't actually done it yet. Do we know what the new all-time high is? I was joking with Nick Shaheen. I can't even count that high anymore. Is it in the millions?
Oh man, I can't even get enough digits in here. I think 6,304,320. I'd be happy to.
$6 million. The $6 million stock. So to
Yeah.
get your money back, if you're buying at the all-time highs, stock's got to go to $6 million a share.
All right, let's
Story.
take a break here, and we're going to bring in Gene Munster, managing partner at Blue Ventures, to talk about Apple and much, much more. We'll be right back with Gene.
One.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Kahn, along with Dennis Dick. We have Spencer Israel working the boards, and we have Gene Munster on the line. He's the managing partner at Loop Ventures, and he will also be a panelist at the Benzinga Global FinTech Awards. Gene, how you doing on this Wednesday morning?
Doing well, Joel. Thank you.
All right, great to have you on here. I just got to harken back to May of 2012 when you made a bold prediction that Apple was going to 1,000 and you had your iPad and your iPhone and stuff. I just want to be the first to say congratulations on that.
Well, I appreciate that. The road there was a little bit longer and took a different turn than what we had anticipated, but I appreciate that. I would just point out that the iPad is not what ultimately ended up getting us there. It was the services business is really emerged over the last 3 years, and so that was the factor that kind of got us across the finish line.
All right. Gene, time for us to dig into this report, and I have your picture up right now. I'm going to move over to back to the chart though. So let's dig into this report. Apple coming in below expectations, although we know how high those expectations usually are. So give us your first impressions on what you're thinking from yesterday's report.
So they missed the iPhone number, and that's a disappointment. Their explanation was that they are already seeing some consumers wait for the next iPhone cycle, which has obviously been more publicized now than ever. But it was a small miss, but that was disappointing. But probably what more than made up for that, or close to made up for that, was the services business. That was in line with the street, but it grew at the same pace as it did in December. And that business is about twice as profitable as their hardware business, and it's more predictable. And obviously, investors should like that. So when we put it all together and take into account their guidance too, which was slightly below where the street was at for the June quarter, that actually de-risked the June quarter ahead of this next cycle. When we put it all together, if I was going to give it a grade, I would give it a B. If I was going to give the setup a grade, I think it's still a B plus setup going into the next few months in anticipation of this next phone. It's still all about the iPhone 10 and how growth of the iPhone can go from low single digits to low double digits over the next several quarters.
And so following up on that iPhone growth, and one of the stories we've been watching, the past few years has been iPhone growth in emerging markets in China and India. How do you see, now that we have one more data point, how do you see that playing out?
China parts continue to be a rough spot for Apple. It's their second largest geography. It was down 13% in the quarter. It was down in the mid-20s in the December quarter. So it's down at a less, it's bad, but not as bad. And Tim Cook's comment on last night's call said that China is going to still be down in the June quarter. Not as bad as it was in the March quarter, but what you're seeing in China is basically a split between those consumers that can afford an iPhone, that the higher-end iPhones are continuing to grow, but the ones that are more price-sensitive are seeing some competition or increased competition from the likes of Huawei. And so I think that they are still holding up India as a big growth opportunity. I believe that's going to be part of the story. But I think emerging markets has been much more difficult for Apple, and there's no quick remedy.
Gene, is this a big surprise, though? I mean, with the new phone coming out on the horizon, hasn't the Apple cycle of phones kind of fouled, the price kind of fouled that? I mean, they're hitting the stock a little bit, but man, it had a great run into it. That's probably why it's down a little bit. Two questions here. I mean, wasn't this kind of, predicted? And second of all, do these numbers make you revise your price target at all?
We're still optimistic that the stock is going higher into the cycle. And I want to talk a little bit about, there's a trading dynamic that I think investors or people should be aware of. But, this was no big surprise. I think the iPhone number is a disappointment. I think that they're seeing more people hold off, as we talked about, in anticipation of the next phone. I think that any investor who was owning it before yesterday wasn't owning it for the March quarter or the June guide. They're still owning it for the hype and anticipation going into the next cycle, and that still is intact. You're going to see a phase where the first week of June is WWDC, which is their developers conference, and there's usually some announcements around that, and investors get optimistic. So that's that's a catalyst. And then obviously when the phone itself comes out. So to answer your question, Joel, nothing really is a surprise here. We're still setting up well for the iPhone growth to return. I think the bigger question is what happens when we get into August, ahead of when this anticipation is fully baked in. What happens to the stock then? And I think I could see the stock taking a pause at that point for a few months, and part of the reason is you're going to see a shift into how people view this and start to get actually concerned about what the tail of the iPhone 10 is going to be in the March and the June quarters of 2018. Investors obviously play things 6 months in advance, and so I think that's what investors should be kind of weighing, those two forces at play.
Gene, what about the Apple suppliers? How do you see this report impacting current suppliers or potential new ones?
I think the supply chain is still setting up for iPhone 10, and Apple's saying that this is going to be an important release. Tim Cook hinted to that on a call. So from a supplier standpoint, yes, the numbers were slightly below. It wasn't actually as bad as the reported numbers when you think about the supply chain. There was a channel inventory change that actually made the iPhone number look a little bit worse than what it really was. But I think from a supplier standpoint, everything is essentially status quo at this point. I think if you look at suppliers, the units are relatively small for things like AirPods and the watch. That was a positive surprise. The watch did almost 3 million units, and we're looking for 2 million units. And they talked about their wearables, which is predominantly the watch and their new AirPods headphones, being about a $5 to $6 billion business over the past 4 quarters. And so what that means is that business is actually doing a little bit better. So I think anybody who has exposure to AirPods or watch should feel a little bit better today.
We're on the line with Gene Munster, managing partner at Bloop Ventures. Apple isn't the only stock you follow. I want to talk about one that's already reported, and that's Amazon. I know you've been a long-time Amazon bull. We'll let you comment on the recent price action. My question for you is, are they really going to go brick and mortar? I mean, there's been rumors about Whole Food markets and Kroger and all these things. Here they built their entire business model on staying away from the brick and mortar. And then you get a stock like Whole Foods that shot up, from 26 to 37 because Amazon's going into brick and mortar. I mean, what am I getting wrong here, Gene?
I think they will dabble in brick and mortar. Yes, they are testing. They are playing around with bookstores, which when we look at all the different things that Amazon is playing in, everything from drones to voice activation to automated reordering for like your washing machine, all those things. The one that is most puzzling to us is their bookstores. They've now have 6 bookstores announced. They've announced that they're going to have 6 bookstores. I think what's more exciting on the brick and mortar side is this Amazon Go store, which is kind of in test mode in Seattle right now, which basically there aren't any people working in the store. It all uses computer vision, and you kind of go in through a turn gate when you go into the store, and it knows who you are, and you just pick things up and just walk out of the store. I could see that in the next 50 years, the amount that is bought online is going to go from about 15% today to probably 70%. There still will be 30% or so that's going to be bought with brick and mortar. And I think Amazon does want to play, and I think that's their Go store play.
Okay. All right. I got to ask you about another stock here. And I don't know if Dennis is listening, but Tesla. I mean, I don't know if this is one that, you've been following for a long time. Obviously, it hasn't been as long as Apple. It's a stock that we can't figure out. I heard you talking about that, participating in the race to the $1 trillion cap. Talk us into being bullish Tesla.
We got a lot more to come on that, so I just want to keep it at a really high level. But I think what I can say is that people generally think of this as just a car company. And I think the people that are more forward-thinking would say that it's not a car company, it's a consumer device company. Your car is acting more like an iPhone. But I think that if you just go back and look at their vision statement, you can start to understand why they're actually trying to push for even a bigger change and have a much bigger vision than what is clear today. And so check out their vision statement, and I think that will kind of fill in some of the pieces about why we think that Tesla is just starting.
All right, Gene. Facebook reporting today after the bell, we're looking for $1.12 and $7.82 billion in revenue. What do you think will happen today with Facebook?
Honestly, investors are just continuing to be optimistic about what they're doing around Instagram and some of the potential around WhatsApp. That is really the focus. And also, we're going to try to glean some insight into how their stories are being growing and what the potential impact and the read-through is going to be on Snapchat, who reports in a week. So I think that there's going to be no real surprises, similar to how Google, the stock was up nicely on the print, even though it was at all-time highs. I think that Facebook is kind of in the same trajectory. There's probably not a lot that they could say that is going to get people to change their positive view on this. And keep in mind, they've only been really monetizing Instagram for the past year and haven't really even started with WhatsApp. And Mark Zuckerberg's favorite pet project, I'm glad to report, is virtual reality and augmented reality and Oculus. And to say that we haven't even scratched the surface on that is an understatement. And so my point is that it's more about where the setup and the innovation that Facebook is doing over the next 2 to 5 years versus the March quarter.
Gene, before we wrap things up, I just want to compliment you. You made a bold move. You left Piper Jaffray to be the managing partner at Loop Ventures. I know you're highly focused on this virtual reality, just getting off the ground, starting your own business. How are things going and what direction are you looking in?
Well, we got a 40-year plan, and
Wow.
We are moving along nicely with 3 months into this, and we're continuing to do research. We've got 3 analysts that work with the 3 founders, and so we're writing about 3 research notes a week. It's been a lot of fun to cover the same companies that we've done in the past in a more freeing capacity, and so really enjoying it. There's some stuff that I really don't enjoy, the legal, the accounting side of things. That's just kind of goes with the territory of starting something. But I'm optimistic that the trends that we've picked, which are virtual reality, augmented reality, robotics, and AI, we're going to ride the right themes.
All right, Gene, we can't let you go without talking about the Benzinga Global FinTech Awards next Thursday in New York City. You're going to be a featured speaker. You're going to be on one of the panels. The panel is How to Win the Hearts of VCs in a Crowded FinTech Ecosystem. You're a VC in the crowded FinTech ecosystem. How can someone win your heart?
Probably the easiest way is when we ask them a question, just to answer the question. We meet with a lot of companies. We've looked at a couple hundred companies in the last 2 months. I would just say as a starting point, I'm shocked at how people wander with their answers. The more substance to it is we love entrepreneurs that have long-term grand visions. And I think that if you can have these kind of broad grand visions, you can really develop a business that can evolve. And you look at what Google's done and Apple's done and Facebook and Tesla, all of them have very grand visions, and that's a part of the DNA of a winning company.
All right, Gene Munster, he's a founder and managing partner at Loop Ventures. If you want to meet Gene, you can do so next Thursday in New York City at the Benzinga Global FinTech Awards. Gene, thanks so much. We love talking to you, as always. Talk to you, we'll see you next week, so we'll talk to you then.
Thanks, Dennis. Thanks, Joel.
All right.
All right. Thank you, Gene Munster, managing partner of Loop Ventures. I think you guys could tell, just like in my voice and asking these questions, how excited I am to interview someone like that. Looking back to the calls that he made in Apple, we brought up that 2012. Dennis knows me. He's been following this stock since the 90s. And I think the most important thing that I heard out of that interview, he has a 40-year plan. Can you believe that, Dennis?
I don't know anybody that has a 40-year plan. That's impressive.
I don't have a 40-year plan for my life, let alone my business.
I try to get a 4-day plan going.
Yeah, exactly. A 1-day plan. Exactly.
Yeah, and we got to touch on a bunch of other subjects. He kind of teased us on the Tesla there, so I know he's doing his major research on it. Dennis, are you a buyer at 317?
I am not a buyer, but I'm not a short seller either. This is one I'm just hands off on. It doesn't fit. I'm going to keep saying it doesn't fit my description. I'm more of a value investor. It's just not my cup of tea. And I was wrong. I kept looking at this as a car company for the last year, comparing it to Ford, comparing it to GM. And I've been wrong, and obviously, when you start looking at it, maybe they're going to do other things, and they're going to change. If they change the whole world, maybe it makes a lot of sense. I'm really curious to read Gene's research when he breaks it on Tesla, though.
All right, where are we going next here? Did we get
we can go anywhere. There's so many earnings reports here that we did not cover. So, chat, if you want to know one specific, let us know. I'm going to go away from the earnings just for a minute here, though. I want to talk Valiant, VRX. And here is another example of the dog starting to bark. And this is the biggest dog of them all. Stock got down April 24th, $8.31. Had its first green candle in a week. Then it had another green candle. Then it stabilized there. And that, I guess, is the tell. But also the fact that dogs were just, starting to perform well. The dash for trash, whatever you want to call it. But, here we are today. And Goldman comes out with a research note on their credit and is actually coming out with an outperform on Valiant credit. And that tells me, that's a big vote of confidence from Goldman there for Valiant. And that's why we're trading up 4% here in the pre-market. And I'm not saying Valiant's going to turn it around, but it helps when Goldman, says something positive about it.
But Dennis,
I don't know what to say.
I thought it was.
Do you have the note there, Spencer? You got any fundamental information
on
that?
I was going to say I thought it was because they had talked about a potential name change, because we all know how much name changes do.
What are they going to?
What they say about the name?
No, just that I think yesterday was their annual shareholder meeting, and they discussed the possibility of a corporate name change to turn the tide of the press.
All right, it's not up that much. It's up. It hit 1080, but it's just hanging there at 1075. I think Dennis and I are on the same page on this one. Not shorting here. I don't know if you're going to get a chance to buy it at a pullback. If you want to look, you got a round number at 11 bucks, just above that, 1107 high, another 1114 high. But man, oh man, I mean, we talk about ratings, we talk about firms, we talk about reports, we talk about calls, and Dennis, you and I agree. Goldman Sachs has made some fantastic calls over the years. Look what happened with this AMD Valiant here. I mean, if you're buying it at 1074, the most you can lose is $10.74.
And the one thing to note, they did not comment on the equity. They didn't comment on the stock here. It was a comment on the credit. So obviously, stock's trading up because it's credit concerns that's really held the Valiant price down. So it wasn't like Valiant stock is upgraded here. It's the credit that was given an outperform by Goldman. So there was no comment on the equity, no comment on the stock. So we just want to note that. But that being said, I think a lot of people are reading into it. Hey, if Goldman likes the credit here, maybe there isn't as many, credit concerns as everybody on the street thinks there is at Valiant. So.
All right. Speaking of Goldman Sachs, they're out there buying some Big Macs here. Another upgrade. Another upgrade for McDonald's.
Yeah, Goldman coming out with the upgrade to buy on McDonald's here this morning. And I mean, this is just, everybody's on the bandwagon here now. And this stock has been a monster performer here. And, maybe I kind of liked it back at $100 here, but $142 here now, it's getting too pricey for me. So I'm out on McDonald's. I'm not going to. I was never in it. But, I'm not going to be buying it up here, I don't think. Looking at the book, a little bit of size, 142. I would say go to your next whole number, which would be 143. That might be the level that gets tested here today. But, to think Goldman's going to run or McDonald's going to run 2-3 points on this, there's just been so many upgrades now that even the reaction to them is somewhat muted. So it's up 79 cents. But how many upgrades have we had in the last month here on McDonald's? Got to be 4 or 5.
Yeah, exactly.
Totally analyst chasing price. And Goldman usually makes bold calls, but they're chasing price on this one.
Pre-market high, 142.80. You backed off. All-time high that was made a few days ago is 142.79. So there's a great confluence there with the hitting it. The pre-market coinciding with the daily. Spencer, we're going to look at the monthly chart here. You talk about, you see wild price action, but a lot of times the most money can be made from looking at consolidation periods. And look at the consolidation. It was basically between 90 and 100 for 4 years.
Yep.
For 4 years. And you were getting paid to wait with a dividend, right? A decent dividend's probably a lot lower now. They might increase their dividend now. So that's another thing that might give it another boost. And then look at that. It finally cleared 100, paused at 110, 120. I mean, 150. I mean, hey, if everyone else is, I'm going to upgrade it and my target's going to be 150. I mean, what the heck?
I mean, it's just a staple. Everyone seems to go to McDonald's at some point in time. I mean, you have kids. They got it set up so well there. They got the playland. You can go there. Kids can play for free. You get fed. You feed your kids. They all like the McDonald's food. Even as a kid, I loved McDonald's, and I bring my kid there now too. So, there was probably a lull in there that I didn't go to McDonald's that much when I didn't have kids. But people who have kids go to McDonald's. But now they've even attracted, they've turned to these McCafes, and they're getting people, like it's a coffee shop too. So they're, competing with Starbucks almost a little bit too. I mean, they totally reinvent themselves. Some of these McDonald's are really nice now.
What's your all-time record for consuming food at McDonald's?
Yeah,
I think we all have one of those. We all have one of those from college.
Okay, Spencer, you go first.
Oh no, I don't know mine. I'm just saying we all.
Okay, Joel seems to know his. How much McDonald's did you consume?
This was when I was a senior in high school, and we were training in Florida. We were swimming like 10, 12,000 meters a day. After one of the morning workouts, I ate 4 quarter-pounders and 2 large fries.
You're hungry.
Yeah. All right. Do we have time?
And then you were sick for a week.
No, I was fine. He probably went and swam at 5 o'clock that day anyways. Any other ratings changes, or do we want to just wrap things up?
Well, let's preview. So tonight, okay, so you had a ton of earnings reports that are already reported, but tonight we're going to get Facebook. We are going to get Tesla. We already talked Tesla with Gene there earlier, but let's quickly talk Facebook because we didn't really dive into that one here. And Facebook is going to report tonight. It is making another new 52-week high, despite Apple being down here this morning. So while it's actually kicking up, it's 153.44 was the high yesterday, so it's testing that. The pre-market probably takes it out. I mean, so here you are. This stock's run a lot in the earnings report. Although we saw Amazon and Google gap up on their reports, and we saw Apple just come down a little bit here. What are your thoughts going into the Facebook?
I'm kind of looking for the same kind of thing that Apple, good report, but just with such a big run up, 140 to 153 here. They're really going to have to blow things away. So, trimming a little. Maybe the play was like in the Apple, buy it in the earnings run, something Nick talks about all that, all the time. Everyone wanted to get ahead of the report. If you're trading it today, the former all-time high or the all-time high yesterday was 53.44. All-time closing high 152.78.
Can we get a quick imbalance look before we go, Dennis?
Sure. Let's take a look here. Bank of America, 232,000 to sell. The banks are a little bit weak here this morning. JP Morgan, 87,000 to sell. So that's kind of a little bit of a standout sector here. ExxonMobil, 35,000 to buy. Chevron, 14,000 to buy. Oil is up just slightly here in the pre-market. It's up a nickel here now if I'm looking at the U.S. So Ford's got 222,000 to buy. Ford has been a disaster. It's one of those value traps that got me there too. I do own Ford shares. I like my dividend, but man, I'm not liking my capital erosion here since I've added to my Ford position there a little while ago. Obviously shouldn't have did that. It's got 222,000 to buy here, but it seems like every time that thing goes up, it just gets faded. Coke, 59,000 to sell. Twitter, 145,000 to buy. Just an incredible run here for Twitter. The run continues here this morning. The stock is trading up once again. Momentum behind its back, or at least the wind is in its sails here, at least for now in Twitter.
All right. Looking ahead to tomorrow's show, if you've been following the news, you may have seen Puerto Rico recently in the headlines. They had another deadline this week with regards to their debt crisis. We're going to have our resident Puerto Rico expert on tomorrow, Kate Long. She's a muni bonds expert and the founder of Puerto Rico Clearinghouse. She'll be joining us tomorrow at 8:35 to sort of break down the latest that's going on in Puerto Rico. That's it for us today, though. Hope you enjoyed our show and our chat with Gene Munster. Once again, do want to mention Gene will be at the Benzinga FinTech Awards next Thursday, May 11th, in New York City. You can go to benzingafintech.awards.com to learn more about attending that and potentially meeting Gene in person and getting his thoughts on how to win his heart as a venture capitalist in the crowded fintech space. That's it for us today. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investment advice. We'll see you folks on Thursday. Have a good rest of your day.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.